Hi, good day to all. This is Calvin here. Welcome to this week latest edition of the weekly technical outlook on the major stock indices for the week of 24th of May to 28th of May. So I'll be covering as usual the trend bias, the key levels to watch on the SPX 500, the Nasdaq 100, the Hong Kong 50, the Japan 225, and the German 30 index. So let's take a look at the disclaimer slides first. All right. So before we go into the various respective technical charts of the major stock indices, let's take a look at the raw momentum of the weekly performance across the globe from US, Asia to Europe in terms of last week performance versus its prior week and versus its prior 4-week average. So let's start with the US major stock indices, the S&P 500, the Nasdaq 100, the Dow Jones Industrial Average, and the Russell 2000. So we could see that last week performance was more of a consolidation among all of them are in the red. So if you look at versus its prior week performance, about the same versus its prior 4-week average, almost the same as well, except that the Dow Jones Industrial Average actually kind of underperformed last week weekly performance. Is actually negative 0.51%, but compared its prior 4-week average, it was almost unchanged. But what's positive over here is that the Nasdaq 100. So this Nasdaq 100 actually have a positive return, a weekly one of 0.14%. It actually managed to actually kind of start or snap its 4 consecutive weekly of performance of negative numbers. That you could see that the average 4 week will be negative 1.18, negative 1.18. So you could see that last week performance actually surpassed the prior week at negative 2.38 and also its prior 4-week average at negative 118. So what you could see is that perhaps we start to see a bit of positive signs start to come back into those technology related stocks. So you could recall that in the last couple of 1 to 3 months, technology stock has been underperforming against, if you compare it to the broader market perspective, where the market leaders will, in terms of the US stock market, were cyclicals and value. So that consists of energy, financial, industrials, and materials. So it seems to me that right now, the Nasdaq 100 has started to show signs of positiveness from a raw momentum perspective. So, which is actually good for the overall stock market. Why? Because if you look at the overall weightage in the whole US market, the highest weightage is actually those technology related stocks, especially we're talking about those FANGs. We talk about Facebook, Apple, Google, Amazon. That actually comprises a very significant portion on the US stock market. So think about it. If this technology company, which is consists of those US big tech, continue to keep falling, it doesn't actually bodes well for the overall general market as a whole, because given of their significant weightage in the overall US stock market. So it could actually in the medium term to the longer term is where we're talking about in the next 3 to 6 months, even though in the current quarter from Q1 to Q2, we see outperformance in the financials, the industrials, the energy, the materials. These are called cyclicals and value. They may not be sustainable if the big boys, which is the technology stocks, keep on continue to fall or underperform the market. So I will start to see that yes, we may start to see a bit of positive signs on the Nasdaq 100, which actually translate to perhaps potentially a kind of a more sideways movement, or even better still, a potential basing movement for the Nasdaq 100. So later I'll take a look at the Nasdaq 100 chart for you all. So one thing also positive about China-related stocks, which is the Hang Seng Index, the Hang Seng Tech Index. Still recall that they are actually the effect at the start of the year that were actually the best performer is only right after the Chinese New Year, Lunar New Year break, where the central China government actually starts to actually impose or give a bit of hawkish commentary and hawkish remarks to say that, hey, their localized stock market is getting a bit frothy. They actually dislike the price movement, and also they start to clamp down on their China big tech practices in terms of from fintech and even the e-commerce that cause this various negative feedback loop that fit into the Hang Seng Index and the Hang Seng Tech Index. But what we could see last week is that they start to show signs of positive performance, especially on the Hang Seng Tech Index, where you start to see its weekly performance at plus 6%, which is actually astonishingly good versus its prior week and also versus its prior 4 week average, which is at negative 2.05. You look at the huge percentage difference. So perhaps we start to see a bit signs of revival, or what you call it, signs that we may start to reach a bit of capitulation. That means we're talking about the previous multi-month decline since late February has more or less reached a potential inflection point where we could start to see potential bottom up formation for the Hang Seng Tech Index, which would actually translate a positive feedback look to the Hang Seng Index as well. So for the Nikkei 225, nothing much since last week break or last 2 weeks break of that sideways configuration since April, yeah, early April. So kind of a almost unchanged 0.83%. One thing good is actually trading above its prior week performance, which is negative 4.34%, and also above its prior 4 week average, which is at negative 1.35. So for the German 30 index over here, we have 0.14%. Pardon me, let me go back again. Sorry about that. At almost unchanged at 0.14%, 0.14%, which is almost the same as its prior 4 week average at negative 0.07%. So later I'll share the chart of the German 30 index, which is still actually positive itself. In fact, if you look at the chart last week, it actually attempted to actually retest its all-time high again. Okay, so now let's look at the breakdown of the S&P sector's performance for last week, for the week of 17th of May to 21st of May. So what we could see last week is that, yes, indeed, it's a kind of a consolidation week. So we could see all the prior outperformance in the last 4 to 8 weeks starts to actually underperform last week. Financials, consumer we call about cyclicals, financials, materials, industrial, energy. So what you see up there at the top is actually defensive sectors. Real estate it consists of REITs, which is at 0.91%. Then you have healthcare, 0.74%. Utilities, 0.31%. A bit of signs of positiveness, which is the technology sector at 0.13%. That actually causes the Nasdaq 100 to actually outperform last week, which I shared with you in my first slide. So, but if you stretch it out, because you know that weekly is very erratic, so if you stretch it out at a higher time duration, we call it a rolling time duration, you see a clearer picture from here. So if we stretch out to 1 month, it's a rolling 1 month till end of last week, which is last Friday, 21st of May. You could see that the top performer, you could see that the top performer still actually cluster around the cyclical and value name, which is energy, financial materials, industrial, which is showing 8%, 6%, 4%, around 2%. All of them actually surpass the rolling 1 month performance of the SPX 500, which is at negative 0.42%. So at the bottom is your information technology. All right. So if you stretch it out further from 3 month, rolling 3 month, you start to see the top names are the similar cyclicals and value concentrated related stocks. Okay, financials, materials, industrial, energy, all recording double-digit gains if you compare to the information technology, which is almost unchanged for the rolling 3 month till 21st of May, which is last week. Then you have this is year to date until 21st of May, last Friday, SPX 10%. So you see the biggest gainers are still these cyclicals, value related stocks. Okay, energy plus 36%, financials plus 27, materials plus 19, and your information technology is still quite miserable at plus 4%. So if you could see over here is that the outperformer continue to actually concentrate on the cyclical and value weighted stocks. All right, so we start to see a bit of, based on the weekly performance, the information technology has started to show signs of, we call it stabilization. So it's good that you cannot take 1 week performance as a benchmark. So it's better for us to actually to be more prudent to take for about another 2 or 3 weeks, another 2 more weeks or so, to see whether the information technology sectors will be able to actually catch up from here. Okay, so as you know that US Q1 earnings report is still ongoing. It's almost, I think, come to the close about 90% of the S&P 500 has already reported their earnings. So this week itself, we will start to see one of the major chip maker, NVIDIA, reporting their fiscal year Q1 FY 2022 Wednesday after the market close. Then also closer to Asia, we have two, we call it Hong Kong, China company listed in Hong Kong, Xiaomi, when Q1 earnings Wednesday after the Hong Kong market close. Then yeah, Xiaomi of Hong Kong, and followed by one of the China big tech, Meituan, on Friday after the Hong Kong market close. All right. Then we have a couple of interesting platform related US big names like Snowflake, which is Wednesday after the market close, then Workday Wednesday after the market close, then Best Buy and Dollar Tree, those are more of a uh, retail-based business. We talk about budget retail stores. So it's very important to see how the performance of these two company perform for Q1 because we're still talking about that reflationary play that is slowly start to creep out across in US and across the globe. And if they start to show positive Q1 earnings numbers, for these two companies, that means we're talking about pretty much resilient US consumer that starts to actually start to spend and start to recover from last year pandemic woes. All right. So over in Singapore, we have Singtel. Singtel will report its full year FY financial 2020 earnings, which is on Thursday before the Singapore stock market opened. All right. So now let's go through the technical chart of the various stock index that I want to share with you all. Okay, let me go to my platform. All right. Okay, so let's start with the S&P 500 first. Okay. So you could see S&P 500, right? We always start from the daily chart, all right? Even though we're talking about weekly technical outlook, we go down to the lower time frame chart, which is the 4-hour chart, but it's take a look at the bigger picture. I mean, we talk about take a look at the entire forest before we dive into the trees. So if you look at the bigger picture over here, we still no see signs of topish formation. Yeah, even though we start to see that hey, inflation is coming in, there's a risk of stagflation. Some of the narrative it starts to point out where we start to see potential slowdown in growth later in the later part of the year, followed by tempering by global central bank. But the price action on the S&P 500 is still doesn't show this narrative yet. I mean, if we're talking about the price action, it doesn't form what I call topish configuration like double top or an inverse head and shoulder or something like that. It's funny, head and shoulder or kind of a ascending wedge formation. So all in all, it's still trading pretty much healthily, holding above the 50-day moving average, which is acting as a support very nicely since the slide of 1st of Feb, the decline of 8th of March, 25th of March, and most recently on 13th of May. All right, and it's still every time it actually tests this 50-day MA, it also tests the ascending channel support that is in place since 23rd of March 2020 low, which is actually this whole uptrend here we are considered as a major uptrending phase that is still intact. All right. So if you look at the daily RSI, which is a measurement of momentum, momentum is still pretty positive. If you look at how the RSI actually managed to bounce out from a corresponding significant support at the 45 to 37 level, now actually inching back up above the 50% neutrality range. Okay, so if we were to look at the next key resistance, we're at a 4300 level, followed by 4450. Okay, defined by a key Fibo expansion projection levels. All right. So if we were to go to the 4-hour chart, which is the strategy chart for this week. So what I have last week is that I actually used this two zone here as my key medium-term pivotal support, 4030 slash 3980. So last week was a kind of a sideways formation, but what is positive over here from last week is it started to shape a series of higher low, okay, which is positive. And if you look at the 4-hour RSI, 4-hour RSI starts to do a bullish breakout from a significant corresponding resistance, now turns into a pullback support and starts to test and bounce off from it on last Friday. So overall, short-term momentum is relatively positive, which actually support our potential bullish bias on the SPX 500. So as long as this 4030 slash 3980 key medium-term pivotal support holds, we still have a view on the S&P 500 to shape higher high to test the next resistance at 4280 slash 4300, then thereafter followed by 4330 slash 4360 level. Okay, now moving on to the Nasdaq 100. Okay, okay, for Nasdaq 100, if you recall that 14,040 is my this quarter Q2 upside trigger level. Okay, that means upside trigger level, that means I define in my Q2 chart, which is, okay, this is my, okay, I'll go back to the weekly chart. Okay, so this was my strategy for Q2 to actually hover between this range, 40,040, followed by 12,000 level, which is the 50-week moving average. So at that point in time, I was quite hesitant to actually turn to be very outright bullish. Why? Because of this impending bearish divergence. Okay, so right now over here is that for sure, if we start to see a breakout, a bullish breakout above this 40,040 level, this divergence will be more or less negated already. All right, if, because of this corresponding break of this RSI as well. So what we could see over here is very similar to what happened previously as well in the past, from January 2018 to August 2018. There's this bearish divergence. That thereafter, after there's this bullish breakout from here, okay, you actually negate the bearish divergence. So what we could see over here is that the price action needs to actually move to actually break above the 40,040 level before I am more confident to actually turn bullish in the longer term, which is my quarterly outlook. That means for this week itself, for the weekly outlook, right, we will still be looking at definitely 14,040 as my upside trigger level. That means any signs of, we call it potential push up, I will actually say max up to 14,040 level first. Then thereafter, we should observe how the price react from there, because this 14,040 level is being defined as my longer term chart, which is the weekly chart. So I got to respect this longer term level. So I cannot say that, hey, if there's an intraday break above 40,040 level, I got to validate a bullish outlook on the Nasdaq 100. No, because I need to have a weekly close above it, because it's my upper is my what I call that the make or break level or my quarterly outlook that is defined on the weekly chart itself. So what's positive over here is that it's now trying to actually goes above the 50-day moving average. Medium term momentum, as represented by this daily RSI, also try to turn positive as well, bouncing off from a key corresponding support at the 38% level, and now trying to inch back up above the 50% neutrality zone. All right. So for actually, it's no change right on my strategy chart that I have last week. So it's still kind of a did a test on this pullback former, I'll say former neckline resistance turns into a pullback support level 12,920 as my medium-term pivotal support start to show signs of a higher low. Last Friday or last week, it actually break this minor descending resistance that is linking the high when the previous time, which is at the end of April, where you did the last test at 14,040 level, then thereafter it started to trade downward. So it actually managed to break out above this descending resistance. So telling us that a bit of upside momentum on the short term has starts to flow back into the Nasdaq 100. Then what's positive is actually last Friday it managed to retest and stage a rebound off from here. Okay, so what I would like to actually see over here is this as long as this 12,009, because I do not want to tighten my key medium-term pivotal support to a higher level, because there's still a risk that it can still churn a sideways in this what we call it long-term sideways configuration. So still using that 12,920 level as my key medium-term pivotal support. Then at most, I'm still looking for a potential push to actually test that longer-term upside trigger level at 14,040, which for the Nasdaq 100. Okay, so yeah, we're still playing around these two key levels. Okay, for this week. Then on over to Asia will be the Hong Kong 50. So Hong Kong 50, right? What we could see that, okay, this is where the market opened from market open after the Chinese Lunar New Year break. So it's been trading in the kind of a close to about 4 months or so of downtrend. okay, 4 months plus saw a downtrend, okay, hitting the low of 25th of March, then to 13th of May recently. So it seems to me that right now the market has tried to find a basing configuration over here on the 4-hour chart. So what positive over here is that the last touch or last dip or last retest recently 2 weeks ago on, in fact, yeah, on 13th of May, which actually very close to the 25th of March low, it actually formed a bullish divergence, okay, on the 4-hour RSI. Okay, what is a bullish divergence? We kept lower low on price action, but higher low on the RSI at the oversold. So what is telling us that this last retest of this low, which is the similar low of 25th of March, is coming in at a very lesser momentum compared to the its previous decline that formed the March 2020 low. So that means we're talking about this momentum here, this last retest is lesser than the momentum over at the previous decline, which is actually good. So it's actually telling us of a forming what I call a potential basing formation in terms of downside momentum that started to ease. So that's the ingredient for a basing formation. All right. So what we could have for this week is that I'll still keep the key medium term pivotal support unchanged at 28,000 slash 27,600. So still looking for this potential push up to test this trigger level. So this will be my upside trigger level, no change, 29,270. So unless we have a kind of a, so this is a 4-hour chart. So we need to have a daily close, a daily close better still, because we don't want to have a kind of whipsaw again on the 4 hour. So at least a daily close above 29,270 to actually validate a further push up in first step to target 30,140 and followed by the swing high area of 18th of Feb, which is 30,760 slash 31,000 80 level, which is also the exit potential of this impending potential double bottom formation. All right. Okay. Then now moving on to the Nikkei 225 or the Japan 225 we call in our index. Okay, so if you look at the Nikkei 225 or the Japan 225, okay, since last week, right, it actually broke down from this so-called symmetrical triangle configuration that was in place since middle of Feb. Okay, so this high was actually a 32 plus year high, okay, which is quite significant. Then thereafter, it consolidated, refused to do higher high and start to break down. But the funny thing is that the way it break down, it actually didn't actually do a proper follow through, and it managed to find support at this last swing low here at 27,500 and also the entire major uptrend phase, which is taking for the low of 16th of March all the way up to this 31-year plus high, which is printed on 16th of Feb, the 23.6% Fibo retracement. Okay, notice this price here, 23% Fibo retracement. You actually store at this area here, which is very close to this 200-day moving average as well in orange, which actually managed to find support in this entire major uptrend phase since 16th of March 2020 low. So if you look at previously on 15 June and 30th of July last year, it managed to test this 200-day moving average. Then thereafter, it started to shape higher high. So what we could see over here is in terms of price action wise, right? It doesn't seem to me that we are now having the start of a trend reversal on the downside. Trend reversal as in a reversal of this major uptrend. Okay, so it could be a very messy kind of a configuration, we call it corrective decline. So what we could do over here is that key levels to watch would be definitely 27,500. Then you have this previous support of this symmetrical range now turns into a pullback resistance, which managed to cap last week price action. Okay, and right now at the start of this week, it attempt to test it again. So for this week, right, so I will still maintain that neutrality stance for this week, which is at 28,500 level. This is for our chart. Then 27,140. So I push it slightly lower to take into the intraday low of 27,136, which is the low form on 13th of May. So 27,140. So neutral between these two range from here. So unless if we start to see a 4-hour close above 28,500, then I could validate a push up at least to play up potentially towards the top of that former symmetrical triangle range resistance again, which is at 30,230, followed by the 16th of Feb high, which is 30,750. 750. So if we have a 4-hour close below this 200, 27,140, we could see an extension of this corrective drop to test the next support, which is also the 200-day moving average at 26,215 level. Okay, so still maintaining that neutrality stance on the Japan 225 index. All right. So now moving on to Europe will be the benchmark index. The Europe benchmark index will be the German 30 index, or DAX they call it. So if you look at DAX over here, is that it starts to actually try to test the third time of its current all-time high level, which is at 15,530. So in fact, right now it's trying to retest again. So what's interesting over here is that it starts to shape a series of higher low, all right, and also holding above this 50-day moving average, all right, from here, and this major ascending trend line support that is in place since the major uptrending phase that has taken shape since the low of 19th of March 2020. RSI, nothing scary. There's no bearish divergence. Now trying to bounce off from this corresponding resistance or corresponding support level at the 41% level. All right. So all in all, still pretty positive on the German 30 index, which is this is the daily chart. All right. So the next resistance level will be at the Fibo expansion cluster level, which is at 16,070 level. Then higher up, we have 16,685. So all in all, I'm still expecting further potential upside on the German 30. So going to the 4-hour chart, the strategy chart for this week. So I would still maintain that 14,800 as my key medium-term pivotal support level. Intermediate resistance or intermediate support, pardon me, will be at 15,220, which is uh, last this ascending channel support, a minor ascending support that has managed to kind of act as a support in previous dip on 13th of May, on 20th of May, and as well as 4th of May, that is in place since the low of 1st of Feb 2021. So still looking for a kind of a push up to actually test the next resistance level at 16,070 in the first step. And what's positive over here is that I want to highlight that 4-hour RSI, which represent the short-term momentum. Short-term momentum has turned positive as well by this bullish breakout of this significant corresponding resistance that was drawn from this previous overbought condition. Okay, and right now it actually did a bullish breakout, okay, from this corresponding resistance. So what it means that short-term upside momentum has starts to show signs of a revival that is kind of supporting further potential upside movement in its price action on the German 30 index. All right. So guys, I've covered through the major stock indices across the globe. So to sum it up, overall here is that the major uptrend and the medium-term uptrend is still positive, and there's still no signs of a kind of a distribution pattern or distribution behavior at this point in time. So despite we start to see a build-up in narrative of that stagflation or inflationary scare scenario. Okay, so with that, do have a great trading week ahead, and I see you all next in my next video.